Today we're going to break down some news articles about the S&P 500, some housing market, and housing prices. Also, Merry Christmas. Let's jump right in. So here, you have the S&P 500 and Dow hit record highs as Santa rally reaches Wall Street. As it happened. So, on the left here, the S&P 500 daily time frame, I put a pattern on it. I know I did say before it would drop. It found support out of nowhere, decided to go up. It does that. It came up, broke some resistance lines, so I'm just like, you would get out. You need to get out your pattern here and see that it needs to break up out of it to keep going up. Or if you break down out of it, you break down. And this line right here is your price target. If you break down, you go down to where the price target is. If you break up, you go up where the price target is. Keep in mind, you are above the big moving average, which means it has support to the upside. The Dow Jones, similar. You have a trend line here, support, and then you have a trend line here at the top that goes back forever ago. That is being resistance. You also have the big moving average down below giving you support to the upside. It's just a matter of where both of them break. Also, inflation is ready to come roaring back December 24th. So, I did say, maybe in one of my other videos, that your 10-year yield shows you where inflation is most likely to go. So here's your 10-year yield on the daily time frame. You are below the 200-day moving average, which means you have support to the downside. So there's that. You also are bouncing on the neckline of the pattern, which is called the head and shoulders. If you break down below that neckline, no more head and shoulders pattern, no more inflation. You guys will be okay for a while. But if we find support and we go up, no good. Also, there is a new pattern forming here. It is called a flag, and there would be a line here at the top. And if you break that line, it means you get more inflation. As home sales rose in November for the third consecutive month. So you guys are buying houses now. We will break down why that might be happening now. So first off, your 30-year mortgage rate is pretty high. Highest since 2000. Your mortgage interest rates are pretty high right now. So you guys are like, but Gordo, why would you buy with such high interest rates? Well, that's because people who know how to move around their money know how to take advantage of loans. Because remember, this is a debt-based system. And let's say you go buy real estate and you got it for a high mortgage percent. Doesn't matter if it's like an apartment complex or like a duplex, triplex, fourplex, whatever plex, and you just fill it with people that pay down the loan, then you don't have much to worry about. As housing affordability could make small improvements in 2026. So I did pull up the chart of the housing prices on the monthly time frame. You guys have a trend line. Over here was 2020. Doesn't show it on the chart, but I remember it's 2020 right here. And then house prices soared up. And then now you're coming back down. You're probably going to come down and hit this trend line again. If you break this trend line, pop the confetti, you get more affordable houses. But only time will tell for that one. As you can see, housing prices, they're dropping a little bit. Your mortgage is still pretty high, and inflation, the one that you guys probably don't like, is having a high possibility of going higher. And Friday, we will keep breaking down news. I'll keep showing you guys charts and all economics. And I will see you in the next video.